There's no hangover from Alibaba in the U.S. IPO market. Today, Citizens Financial, a financial institution, a bank owned by Royal Bank of Scotland, priced an IPO. With me to discuss the transaction is James Fontanella-Khan of Lex. So James, tell me why RBS is floating their U.S. subsidiary.
Well, the reason they're floating their U.S. subsidiary is because they want to improve their capital ratio, which at the moment are quite low. We need to remember this is a bank that has been taken over by the government during the crisis when it was on the verge of collapse. And so as part of this agreement, it's selling part of its businesses which are considered to be risky, and it wants to just basically reduce risk, increase those capital buffers to be a safer bank for UK taxpayers.
And so is this going to work?
I think it's definitely a step in the right direction. Will it work? I mean, it depends. This is a bank that it's selling 25% at the moment. It needs to sell another 75%, which it hopes to do by the end of 2016, early 2017. So definitely a step in the right direction.
And as far as the IPO pricing itself, it was a little bit disappointing. It priced below the range. It's trading up a little bit today in the market, but as far as the price that sold out yesterday, that was not what they expected.
Absolutely. So the price range was $23 to $25, and it was eventually priced on Wednesday morning at $21.50. So that's obviously a discount. Then if you look at the actual kind of tangible book value, which is what in the metrics that is often looked at, it's trading at a discount, so it's 0.9, and its rivals are more around like 1.5 two times tangible book value. So it is kind of a bit of a disappointment, but then again, it needs to reflect the actual value of the company.
And so speaking of its rivals, Citizens is a different animal than JP Morgan or Citibank. Tell us about the U.S. regional bank sector. What's interesting about it? Why would investors choose one of these banks rather than one of the giants?
Why would they choose one of these smaller banks? Well, if you look at things closely, they've been doing actually better than the bigger banks, the smaller regional banks. As the bigger banks are going through a difficult kind of repositionment in the aftermath of the crisis. They're kind of historically very strong businesses, such as like trading of fixed interest and stuff like that, isn't simply like not fixed income, isn't like working as well as it used to. Whereas smaller banks are kind of closer to their clients. Their loan books are increasing. They got a pretty good sense of like who their clients are, which is helping them to do much better than the bigger guys.
Yeah. So we'll be watching the big boys against these regional players. Thank you, James.
Thank you, Sujeet.